Good afternoon, everybody. So TradeX here. Welcome to my trading den. You'll notice that my webcam is not on today. I've got issues with it, so I'm going to have to get that replaced. So do stay tuned to the end because we are going to cover an absolute monster of a day today. So today I took 61.5 handles across 2 accounts. And today has been an absolute monster. It's my most connected points in a single day, which is pretty cool. And we're going to break it down. We're going to break down exactly how I did it, what was my bias, why, how I got to those levels, and so on. So, guys, before we jump into that, right? As always, if you could smash the like and the subscribe button. I've noticed that 60% of viewers are not even subscribed, so it's crazy. So do the channel a favor and help other traders like yourself view this content because I feel like we're delivering amazing value. And it'd be good for other people to see it because that's the only reason why I'm doing this, to help as many people become sustainable, financially free, and be able to create a life independent from this for themselves, right? So, guys, do consider smashing that like and subscribe, means the world. But before we do that, let's jump straight into the action and let's get into the good stuff. And we're going to break down today. So today is a monster. Let's start off at the start of the day, right? The start of the day. So what I'm going to break down is this price leg here. So essentially from the open up to lunch, and then I'll cover this later, all right? But what I want to talk about is if you watched my recap yesterday, you will know that my macro was bearish, bullish, not the best start. It was bullish, so my macro was bullish. Let's just be absolutely clear there. My macro was bullish, but it is it's knocking on 10 o'clock at night here in the UK right now, and I am boshed. I've been doing Twitter Spaces. I've been doing launching the Red Pill, which is now open, right? So you guys can go and check out that. I'll talk to you more about that in a bit, but I'm tired, so just bear with me today, guys. Bear with me, but we have got some serious value. So if you watched my recap yesterday, you'll know that my macro was bullish. Okay, so we've got the 3 drives here. The middle drive is a hidden order block, and we are looking to take an entry off the lowest down close candle in the middle drive. If you have not seen my 3 drives pattern, which I have coined and which I have uncovered and have recently released to the world, I will put it at the end of this video, so go ahead and watch it. But just know that for now, for the context of this video, this last down close candle was an entry place that I was looking at, okay? So I called out, if price respected this candle going into today's session, I would be bullish. I would be looking for bullish setups. If it decided to crash through this last down close candle, my bias would switch. It would go to bearish, right? So before the day even started, I'm drawing out my levels and I'm looking at where price is likely to draw to and from, okay? Because I want to make this point clear. I want to make this point very, very clear. Price is only doing one of 2 things, and they are running to take buy side or sell side liquidity. So taking liquidity above old highs or old lows, or it's going to rebalance an imbalance. So an imbalance in price. That's your fair value gaps, your volume imbalances, and so on, right? So that is all it is doing, one of 2 things, right? So bear that in mind going into what we're about to go through today, all right? Bear that in mind. Now, if we look at this leg here, we had this previous BISI that was forming as resistance, but once it broke through, it was then forming support, okay? And you can see that yesterday, multiple times, it was treating this BISI, old BISI, as support. So I was going into today's session going, right, well, if price holds this lowest down close candle in my 3 drives pattern and also managed to hold onto this BISI, I am bullish. I am macro bullish. Why? Because price has got to come and rebalance the low-hanging fruit. The low-hanging fruit in this instance, we had a SIBI here on the 1 hour, so this had to be rebalanced, okay? We also had another SIBI up there, which you can see in orange. And then above that, we had old highs. So the old highs is this line here, which was today's session at 2 o'clock. So it's 2 o'clock session, and that's 2 o'clock in the morning, so that's in Asia, in the Asian session. We created these highs here, which was inside an old BISI, right? So we had BISI and BISI, and that was our range that we were working in, okay? So what was I looking at? going into the open. So now we've got context of our potential draws, right? And I will look onto the daily for you just so you can have other levels that I was looking at. So the other levels that we had and that we were looking at is, I don't draw them on, so you guys get used to that. I don't draw lines on my wicks, but we need to know that wicks are gaps. And so I was eyeballing 25%, 50%, 75% of this wick here, right? Of this wick. And so I was being conscious of what those levels were as we were going up. And I was looking for confluences around those levels as to where to take off my partials in the trade. Okay, to take my partials off in the trade. So before we get into this, I'm going to show you my trades, right? So these are my trades that I took today. And I posted these in Twitter, I posted these in my channel, my Discord. So I got in at 20, out at 30, back in at 38, out at 47. That was one account. And then my other account, 38 to 47, 42 to 44, and then 53 to 64. Okay? 53 to 64. Lovely, lovely day. All right? So let's break down the session. Now we know where we are. So those were my levels bullish, and we obviously had this volume imbalance up here on the daily as well. All right, so that was another reason why once price got up here that this would be a likely draw. All right, now let's look at lower time frames. Let's look at lower time frames because that's where the juice is. Now we've framed our overall context is bullish and our potential areas where price is going to run into. Let's now break down what was price doing in the morning session. So you can see that we were creeping up, right? We were creeping up all the way up to the 8:30 news embargo, right? We were creeping up all the way up to the 8:30 news embargo. But keep your eyes on the top right hand box, which is my hourly. What did we have down here that was forming on the lower time frame? What did we have here? We had relatively equal lows form. So what did we have form? We had an absolute ton of liquidity forms below these lows, right? Before below those lows. And then all of this price action here, all of this is doing is engineering liquidity, right? It's engineering stops that are below this as price pegs up. So what happened at 8:30? What happened at 8:30? So this is the CPI data release. Price ran down and swept all of that liquidity. And what did it do? What was it actually looking to do? It was looking to clean up those relative equal lows, right? And as we know, price doesn't have to close below relative equal lows for that to be considered a purge. It can literally be one tick. And so price drops through, takes the stops that are below here and rallies higher, okay? That is confluence number one for me, that price has swept the sell side. And what did I say to you guys earlier? Price is either doing one of two things. It's either purging liquidity below old lows, or it's running into an imbalance or imbalance on a higher time frame, and ultimately, pivoting to take high side liquidity, so buy side liquidity. We had already taken sell side liquidity. We already had my frame context that we had the SIBI, so it dipped into that. BISI. It dipped into that BISI, so we know that BISI is our support line. So it ran into that BISI, swept sell side, was inside my lowest down close candle, inside this middle drive order block, inside my 3 drives pattern. Guys, how many more confluences do you need that price is going to be bullish? This is all setting up your context, right? This is all setting up context. And then what did we get? Right, throw in some more juice, right? Throw in some more juice. We had this huge wick candle. What is that? That is a rejection candle, which had swept all of this liquidity. So this candle is a rejection candle. And so equilibrium, or CE, of that wick is a price where price is likely to return back into before expanding higher, right? So what did price do after the news embargo lift? It ran down to that rejection block. And what didn't it do? It didn't crash all the way through it, right? It didn't crash all the way through it. So what is this showing? This is showing further signs of bullishness, right? What else do you want? Let's jump onto our new weekly opening gap chart, right? Let's jump onto our new weekly opening gap chart. Where was price at this point in time. It had got back into the new weekly opening gap. And for those of you who do not know what your new weekly opening gap is, then it is your Friday close. So 16:14 EST Friday to 6 p.m. Sunday, right? That is your new weekly opening gap. And so price had got back inside that new weekly gap and it was consolidating. That is another level of confluence. And look how it was respecting the low of that new weekly opening gap. All right. So guess what? I got in there, right? I got in there. I took my entry. Right? I took my entry and I was in. So I've given you all the reasons why I'd be looking bullish. Now we're in. All we are doing is looking for higher time frame targets of where price is likely to draw to so that I can take off partial trades. I am now no longer interested in looking at price running lower. I'm simply looking at where price is drawing to. It had already taken the lows. So price is doing one of two things, taking buy side or sell side liquidity or going to rebalance and imbalance. We had taken sell side liquidity. So what is it going to go and revert and do? It's going to go and take an imbalance. It's going to go and rebalance an imbalance or balance an inefficiency. And beyond that, it's going to go and take old highs, right? Go and take buy side. So what was I looking at as potential targets? Now this is where I use standard deviations. And so for me, for people who want to know how I personally trade, I trade with standard deviations, and I personally like the 15-minute chart. So I'll look at swing lows and I'll look for areas of confluence. I look at the swing low and I use a 15-minute chart. All right, and I'm looking for confluences between two swing lows. And so I drew these out on the 15-minute, and then we drop down onto the 1 minute, and we see how they play out. Right, we see how they play out, and we're looking for levels which are going to show confluence, and we can see that these levels, so this is 1 time standard deviation, this is 1.5 times standard deviation, this is 2.5 times standard deviation, right? These are my price targets that I'm looking at, and then what I'm doing is I'm looking at what else are in those areas which is going to offer confluence on a higher time frame draw on liquidity, right? So I'm not going to get too complex today, but you guys should know your PD array matrix. And so that's what price is running through when it's going into a higher time frame premium. And guys, this is a very advanced lesson today. This is a very advanced breakdown. So I apologize if it's a lot for people who are new. But price, when it's running into a premium, is going through that higher time frame PD matrix running into a premium. Okay, so I'm looking at what standard deviations do we have that marry up with that PD matrix. And we had, if you've got no breaker and there's no mitigation block, you're then looking at fair value gaps and SIBIs, which is rebalancing and imbalance. And then above that, you've got order blocks, and then you've got rejection blocks and old highs, right? That's what it's going to run to when it's moving through into a premium. So my first low-hanging fruit was a fill on this fair value gap on the hourly, right? Was a fill of this fair value gap on the hourly. So what was I looking for when I was looking at my 1 minute chart when I was in at 40.20? I was looking at price inside this 1 hour fair value gap for a target, and I had 41. So 41 was a target, which is where I start peeling off partials, right? It's where I start peeling off partials. My next entry was a fill of this fair value gap, right, which happened to be 1.5 times standard deviation, which was 51. I actually peeled off at 47 because 39.50 is obviously a whole psych number, so I was half expecting it to hit to drop before 50, right? So I took some off at 47, I think it was. But then when I saw price reconsolidating, I got back in. And then what else was I looking above that? I was looking at 2.5 times standard deviation. What was 2.5 times standard deviation? 2.5 times standard deviation was a top tick of this old BISI, which I talked to you about, but also allow price to take out these highs that were formed earlier in the Asian session. Bingo, price has fulfilled its objective. It's fulfilled its objective. So I was telling everybody in my private Discord, which you guys can now join, by the way. You guys can now join. So if you would like more of this content and trade live with me every single morning and learn from other fantastic elite traders, like we are a dedicated bunch who are surrounded by people who all have shared goals and You know, it's a fantastic place to be. We all support one another, and we have huge aspirations. And we're only just at the start. So if you'd like to join Red Pill Trading, which is for elite traders only, you know, head over to my Twitter and click on the link, and it will take you through the processes, right? But what I am doing is then when its price is up here, I am looking for price to show signs of reversal, because price now has hit my objective. It has taken the buy side. So price is doing one of two things. If price is doing one of two things, it's either, you know, taking buy side or sell side liquidity, or it's rebalancing an imbalance, right? So we had taken the buy side, so now we're likely to go and rebalance in imbalances, right? Which is looking back through this price leg to look for sort of BISIs or fair value gaps inside that range. Okay, so before we do that, let's just break down this price action, some other reasons why that you might find interesting. So this, when I'm talking about managing a trade, so I've given you my standard deviations and how I used to have standard deviations, and then I'm looking for confluences with where we sit in terms of PD matrices to start peeling off partials, right? So that piece of information there, guys, is absolute gold, right? Now what I'm doing is as I'm going through the price leg, so as I'm moving higher, all I'm doing is just managing my position. That is all I'm doing. I'm simply managing my position. And I'm really sorry if you can hear my missus banging around in the background. I am asking her to be quiet, but she doesn't seem to want to listen. So let's have a look at the 15-minute chart. Let's have a look at the 15-minute chart. 15-minute chart, I'll be looking for what? I am looking for volume imbalances, right? So volume imbalances act as support and resistance. So you can see we have one back here, 15-minute volume imbalance. So I'll draw it across my chart. We also had a 15-minute volume balance here. Draw that across my chart. So look, keep an eye on these blue lines. Let's look at how price interacts with those blue lines when we jump down onto a 1-minute chart. Right? Those blue lines are volume imbalances. Look how well it is respecting them on each level. So every time I'm looking at this, I'm parlaying in positions. I'm adding more, right? I'm adding more. So I'm getting out of my standard deviations, but I'm adding back in down here. So you'll see in my trades I got back in down here because it was respecting this 15 mil volume balance, right? There is other reasons as well, but I can't go through absolutely every reason today. You know, we'll be here until late into the night. But we had another volume imbalance here, right? Another volume imbalance, and then we saw here we had a piece of balanced price. We also had a volume imbalance in here. So this is providing context. You know, we have balanced price. So you know, this is all about managing trade. This is all about managing trade. These are all bullish. These are all bullish pieces of price action that you're reading as price is printing. So at no stage through any of this was I scared. You know, we had another piece of balanced price here. Price came back into 50% of that BPR, rallied higher. This was its last little run before price failed, right? Before price failed. So I did call out that if price broke below this piece of BPR, then I would expect us to run back down. And I'm not going to go through all of this today. I can talk you through this, but I think the video will be too long. There was a lot of information in that, guys, but also a lot of gold. And so I hope you find value in that video today. I really do hope you found value in this. But guys, that's going to be it for me today. 61.5 handles. 61.5 handles in one price leg alone in the AM session. It was an absolute monster. So, guys, as always, trade safe and trade smart, and I'll see you on the other side. Take care now. Bye.